Well, it's safe to say the new year for the stock market has not played out as well as we all had probably hoped. So far, it's been very volatile and down, so seeing a lot more red than we would like to see. Had some jobs reports numbers last week and some inflationary data come out that was not exactly favorable. So let's dive into it. Let's take a look at the numbers. But this is your market in minutes report. We're looking back, of course, on last week, January 6th through the 10th. I'm Mike Minter, Chief Investment Officer for Financial Synergies, and I think this is my first video of the new year. So Happy New Year. All right, so let's dive into it here, and I'll get the laser pointer going. Look at the actual numbers behind this. So as I said, last week was not a great week. Everything was down across the board pretty significantly, and we'll talk about why. But that brings the year-to-date numbers down, fairly substantially. I mean, again, it's we're essentially 2 weeks into the new year, so certainly nothing to get worked up about. But it just goes to show you, there's a lot going on right now. We're about to have a new administration take office in a week or so. So, it's just a lot of uncertainty, a lot of, unknown right now. And so a lot to digest. Let's take a look at rates. This is, and we'll talk more about this. This has been part of this story. So rates have continued to spike, which is not exactly what you want to see, given that we are now in a rate reduction environment with the Fed. But as you can see, the Fed does not control everything, and so rates have continued to rise. So we'll talk about some of that storyline as well. But inflation really kind of stymied the markets last week. Stocks rallied broadly to start the week, but two economic reports on Tuesday, the job openings and the prices paid index among service companies, raised fresh inflation concerns. Higher Treasury yields also put pressure on stocks. Stocks flattened out on Wednesday. Investors reacted to news that the Federal Open Market Committee members agreed inflation risks had increased per minutes from the Fed's that December meeting. U.S. stock markets were closed Thursday in observance of President Jimmy Carter's funeral, so nothing to report on that day. On Friday, a warmer than expected December jobs report caused investors to question whether the Fed will adjust rates in 2025. So this has been that kind of shock where everybody's kind of on pins and needles waiting to see what is going to, if we get any more transparency out of the Fed in the coming quarter. News that consumer sentiment ticked down also pushed stocks lower. When good news becomes bad news, that's kind of the situation that we're in now. In other words, what's good for the economy right now is not necessarily good for the market because of the rate environment that we are in or we're expecting. So the economy actually added 256,000 jobs in December. This was 100,000 more than economists expect. So a huge blowout jobs report. So that's the second highest monthly job gain for 2024. Unemployment ticked down to 4.1%, which was another better than expected data point. So these are now making investors nervous that maybe the Fed won't reduce rates at all in 2025. So that, coupled with inflation starting to kind of rear its head again, is not boding well for expectations. But again, the market will digest this, it will adjust, and over time these things will smooth out. But it's been a little bit of a shock, kind of a shock and awe for the beginning of the year, and that's okay. That's the nature of the beast when you're investing in dynamic markets. Job growth and lower unemployment signals good news for the economy, but bad news for the markets. So exactly what we've been talking about. A stronger jobs market puts less pressure on the Fed to adjust rates. So again, good news for the economy, strong job market, less pressure on the Fed to actually adjust rates down. Market doesn't like that. We had all these expectations, and so there you go. So it puts less pressure on the Fed to adjust the rates, and especially with inflation top of mind among investors. So what's on deck for this week? So we've got some key economic data coming out today. We have the Treasury statement. Tuesday, we'll have the producer price index and some Fed officials speaking. Wednesday, we have the consumer price index. We'll be watching that closely, and some more Fed officials speaking. Thursday, retail sales, import and export prices, business inventories, and home builder confidence index. And Friday, we have housing starts and permits and industrial production. Companies reporting earnings, not a huge week, but we've got some financials and some healthcare going on here. JP Morgan, Wells Fargo, BlackRock, Schwab on Wednesday, and Thursday we've got United Health Group, Bank of America Corporation, and Morgan Stanley. So some healthcare and financials this week. Again, nothing huge, but we'll be taking a look at that. So folks, that rounds it out. Here is our contact information as usual. Please call us, email us, anything you would like to know or talk about. We'd be glad to discuss with you, whether you're a client or not. Hit that subscribe button down below if you haven't already. We'd love to have you subscribe to our YouTube channel and get all our videos as they come out. Beyond that, I will leave you with some fun disclosures for the presentation, and we will speak to you next week. Hope you guys have a great week. Talk soon.